Welcome to the Paycheck to Profit podcast, where your host, Robert Johnson, connects with individuals using their spare moments, improving their lifestyle by converting their paychecks into profits. Yo, what's up? Thanks for joining the Paycheck to Profit podcast. My name is Robert Johnson, your host, and today I'm joined with Jason Staine. He is a husband, a father of two, owns his own business, is a licensed insurance broker, and invest in real estate on the side. Super excited to get in touch with him today and have him on the show to just talk through the balancing act that he lives every day, and a lot of great information coming through about how to make an impact in your own life as well. Jason, thank you so much for being here, man.
Robert, thanks for having me on the show. Balancing act would be a great way to define my weeks, that's for sure. I'm happily married, coming up on 10 years this year.
Nice.
I have two children. One just turned 13, my son, and my daughter is about to turn 8. I've worked in the trades as an electrician for 21 years. I'm affiliated with the union here in New Jersey. And I also started my own contracting business about 10 years ago. I have been investing in real estate for a few years now. I got introduced to it at an event back in 2017 and have been hooked ever since. I started a life insurance practice a couple years ago after reading some very interesting books. What Would the Rockefellers Do was one of them. And there's many other financial books that reference how to utilize life insurance. So I became very interested in those topics as well.
Dude, yeah, that's awesome. So I'm kind of interested to hear a little bit about first jump into what was that real estate event that you went to? Like what got you into the real estate?
So like many people, you would turn on the radio, you'd hear advertisements, hey, you could learn how to flip houses and such, and it was actually a Fortune Builders event back in I say like May of 2017. My wife and I attended. They had like a free event, and then we paid and got tickets to like a 3-day event. Unfortunately, my son was sick that weekend, so my wife could not attend. So I actually brought a friend, a real estate investor friend, with me. From there, I got exposed to wholesaling, how people are fixing and flipping. They touched on rentals and commercial properties, and a lot of terminology, a lot of lingo that I had never heard before. And as a contractor, a lot of the jobs I would do were for real estate developers, house flippers, a lot of landlords. And as I got through these projects, I started asking myself, how do I do this? Because I see all of these people are building all these projects. I want in. So you get curious and you start to look around on the internet, and then you hear advertisements. You're like, I'm going to go to an event. The rest is history.
Nice. Yeah, that's awesome. Taking the first step there, because you were so close to it with contracting, right? Like you said, you're doing a lot of the work on these flips or these projects that others are doing.
Absolutely. And you're just every day. Yeah, every day.
And you're just the service provider. You're not really in real estate. You're providing a service.
Yeah, I'm just another contractor. I mean, there's literally at this point there's probably 20,000 plus electrical licenses that have been issued in the state of New Jersey. So, it's like a swarm of bees coming in and out of the supply house in the morning. I mean, there's tons of electrical contractors. So,
sure.
Yeah, I'm just a service provider at the end of the day.
Nice. So where did Fortune Builders lead you to, like, your first deal? Like, how did that come to play? What was your first deal? Wholesale, or did you fix?
First deal was a wholesale deal.
Okay.
Here's how it started. A lot of analysis paralysis in the beginning. At the event, you get exposed to, you got to open up your LLC in Nevada, Wyoming. Before you do that, you got to, find funding. You got to find this, you got to find that. And it's very overwhelming in the beginning. Anyone who's started out can probably relate to how much confusion of what to do and where to start can be.
I can attest to it.
So it took my wife and I probably 6 weeks to figure out a name for our LLC. We didn't open up our LLC in Nevada either, because at that point, the idea of doing that was just beyond our abilities.
Sure.
We did uh, do our first wholesale deal probably a year or so, a little more than a year after attending that event. And we did that by connecting with someone at a meetup. And that person was expanding their marketing into an area of New Jersey that we lived in. He could not cover all the appointments that he was getting at the time, and he offered to kind of take us under his wing. I will show you how to answer inbound calls, how to set up an appointment, and he handled all of the paperwork. So he basically operated as the integrator in that respect. We were the
Sure.
boots on the ground. So I would connect with the sellers. He would pay for all the marketing, and these leads would come in. I get a little text message, race to a quiet area of the house to make a call, talk to the seller, go on the appointment. And from there, we would, write an offer. Hey, we can offer X amount of dollars for your house. We put a house under contract. Literally 2 weeks after we started working with him, we put a house under contract. Got our
Nice.
first assignment fee. I call that property the one that got away because it was in my hometown. And had I known what I know today on how to buy it, I 100% would have bought that property, because who would have guessed the appreciation that would have came in the 2 or 3 years to follow that. This is 2018. Hold that property into COVID and then resell it with a couple $100,000 equity.
Right.
We made
Yeah.
$3,000 on that assignment. No.
It's a starting point,
Yeah,
and
we had like
learning
a
lesson.
70-30 arrangement where we would take 30, he would take 70. So we made
Yeah.
we made $3,000. But yeah, listen, it's a success, and it proves the theory that this works. You can do this.
Yeah. Yeah. No, that's a great point. Getting that first deal, it doesn't really matter how much you make on it. It's the proof of concept and gives you the confidence and the momentum to keep going, right?
Yeah. Momentum is everything in this business. You have to build off of the opportunities that you come across, and as you're having your successes, you can't kind of let your guard down. You have to kind of accelerate harder, because it's easy to close something and then kind of relax, take a month off, not follow up, and then now you're 3 to 4 months without having any sort of momentum, and that's when the burnout comes in. And we've been into burnout and momentum patterns many times throughout the years.
Sure. Yeah, I think a lot of people get caught up in that like mindset, right? Like wholesaling can be very lucrative if you get deals under contract and 10 to 15, 30,000, or sometimes more if you've really got some good deals. But
Yes.
when you start getting those in, and like you said, you kind of you feel cushy, right?
Oh,
And
100%. Yeah.
yeah, and then you're like, well, I'll just take it easy for a little bit or whatever. But that's really when you have to just keep going.
My
Like
wife
you
says
said,
I
keep
don't
that
have an off
momentum.
switch.
Yeah.
I don't have an off switch. And I'll get wrapped up in the contracting at times, because sometimes in my life, like, the contracting is so lucrative, I can't
Yeah.
say no.
Yeah.
And what happens is my real estate will fall off, or I won't be, doing as much business on life insurance at the same time, right? And building out teams and systems at this stage is so important to keep everything moving forward. There's certain things that I still have to be active in so that the momentum stays in place. Our largest wholesale deal was we did $58,500 on an assignment. That was our best
Nice.
deal, and I pushed really hard at that point to get that. And following that, like, my marketing kind of collapsed after that, and I lost all my momentum. And it wasn't that I wasn't out there trying to do it; just I wasn't doing the right thing. So sometimes that's a factor.
Yeah. Yeah. That's a really good point too. Like you said, you've got to be taking action, but if you're moving in the wrong direction, then that's
Yes,
not going to serve you.
100%.
What did
That's
you
everything.
what did you realize at that point, that like you were putting action in the wrong direction?
I had to stop spending so much money on paid per click advertising, because I wasn't getting appointments. I wasn't getting quality leads. And then what I do, I tried a different type of pay-per-click advertising, which fell apart. And then I tried another one, and I spent a lot of money at that point that I probably shouldn't have been putting in. I should have been doing more boots on the ground, more traditional approaches to getting leads and getting appointments with sellers.
Gotcha.
But the time factor when you work a 9 to 5 and you're trying to wholesale, it's difficult. It's a sales game. It's a lot of follow-up. You have to be out there every day talking, having quality conversations with people.
Yeah. Yeah. Are you on the team? Are you the one that is in charge of that now, or is it somebody else because you have other obligations with your 9 to 5?
So what I've done is here's how I balance things. At times, I'll have opportunities as an electrician that are like lucrative, so I pick and choose my battles. There's times when the union calls, like last year, I got asked to oversee a large project with a team of people. Lots of overtime. It was very lucrative. It was worth jumping in. I sacrificed a lot of time, so I had to switch gears. I can't focus on direct the seller marketing. I have to just be a buyer at that point. And we did. We bought 3 deals last year. But we did a little bit of marketing in the beginning. Just found that it was difficult to try and maintain an operation. We don't have a team. We had some VAs and things like that just to make the calls and try to, connect with people. But to get in and stay consistent, it requires the time. So I pick and choose my battles. I'll contract for myself when, say, the union isn't presenting opportunities, or when the union presents opportunities, I would just work as an electrician for another contract.
Okay.
And I do a lot of my real estate work and life insurance work after I get out on the weekends. I spend a lot of time on Zooms and having a lot of try to have a lot of quality conversations with people every week.
Sure. Yeah. So that's really cool that you have that situation too. Like, you have these 3 different things, which a lot of people will automatically think like, that's a lot. How do you manage it? All these things. But what you just explained was really cool. That you went from being active acquisitions wholesaler to, I actually just want to buy and hold property, and that for all purposes here, that's a lot easier to just have the options to look at those deals and buy the ones that you want.
Absolutely. Yeah. Just become a buyer. If you don't have the time, become the buyer and connect with people that are really good at sourcing deals. So I have a few wholesaler friends that are really good at sourcing deals. It has to fit the criteria for me. I'm a little picky.
Sure.
So, send me stuff that I want to buy, I will buy it. And if I don't want to buy it or I can't buy it, I might know someone who can. And then now what are we doing? We're doing a JV wholesale.
Sure.
So it works both ways. When you don't have the time, you have to get creative on how to, tap other people on the shoulder to go out and do the heavy lifting sometimes.
Yeah. Yeah. And are you buying with your own money, or are you using private money?
Right now, it's our own capital.
Okay.
Part of our journey in 2024 is to start doing more deals with partners to raise some capital, because we're finding opportunities, and when you have finite capital, it pains you to pass on a good opportunity. I'd rather share the profits with a partner. But the stars have to align. Like, it's very important with a partnership that everyone's on the same page, and I'm big on that.
Yeah. Last thing on real estate here, but are you buying those properties? Are you doing long-term rentals? Is there a mix, midterm, short-term? What's your exit strategies on the properties you're holding?
So to date, we haven't done any midterm rentals or short-term rentals.
Okay.
It's not something that we've focused on. We have, we're not opposed to doing any sort of deal that's profitable, to be honest with you.
Sure.
We do long-term rentals, which we have 5 units right now. We've done fix and flip. I have a self-directed account that I did some private money partnerships with. So I got involved in other people's projects, whether it was buy and hold or fix and flip, so that I can get into deal and learn the process a little bit better. And we've done wholesale. So we mix it up. I love doing wholesale. It's a lot of fun. And I love fix and flip. I love collecting rent on the first of the month. Like everything's
Yeah.
awesome.
Right. Are you guys managing the properties yourself? Are they all
Yeah.
in New Jersey?
Yeah, they're all in New Jersey and we self-manage.
You do. Okay.
Yes.
Yeah. Well, that saves you a little bit of money each, but how does that fit in with the balancing act like we were talking about earlier? How bad has it been really? Like self-managing with people calling you in the middle of the night or, issues that have come up. Like I know we hear a lot about, one way or the other. So I'd love to get your perspective on that.
Quality tenants. We renovate our properties to be bulletproof. I know a lot of people say that. Like our first rental was an old duplex, fully gutted, fully rehabbed. Plumbing's good, electrical's good. Um, you know, very little mechanical problems. You have your appliance failure, right? You have your scheduled maintenance. You have to change water heaters, things like that. We've held
Sure.
that property for 12 years. After we've renovated the second floor, right after we bought it, I have not had a single month's vacancy in there.
Wow.
When we moved out of the first floor in July of 2019, haven't had a single month's vacancy on the first floor.
That's
And
awesome.
very seldom are there issues. I have great tenants in there. If there's an issue, we get it addressed. They're very courteous and attentive to the property. The other property we purchased last year, which was the additional 3 units, is a 3-family house. We're still ironing out the process of taking that over. We inherited some older tenants. They've been there a long time. Some pre-existing tenants, they've been there a long time, and those tenants have been good to the property. We've put a lot of work and pride into getting the property looking and feeling like a home for them, where it was neglected for a while, and they appreciate it. And there's questions and things that arise, and they want to know, hey, can I do this or can I do that? And it's normal. It's just a
Sure.
process of managing people.
Cool. Yeah, that's great.
No nightmares. No toilet calls in the
Yeah.
2 a.m. on a Saturday night or nothing like that. And one day
Yeah,
it'll
knock
happen.
on wood.
It's going to happen. Like someone's going to just trash one of the apartments. Someone's going to not pay rent. I'm going to be in eviction court. You're going to get sued. Like those things haven't happened, fortunately. But like that's you do this long enough, and you're in a large enough
Right.
scale, it's going to happen.
Right. And are you a buyer in New Jersey? Are you looking outside at all?
So right now, probably 90% of the stuff we're looking at is in New Jersey. We did our first out-of-state deal with another partner
Okay.
last year.
Nice.
We're flipping a piece of land in North Carolina. Yeah, we're looking at Florida. We're expanding and looking at other markets to kind of get an idea of, what else is out there.
Sure.
There's opportunity everywhere. I just want to have a place that kind of fits that criteria where we like it, we're willing to hold it long term, and we have some partners in those areas that might be able to help and assist in that process.
Yeah. Cool. Nice. So I'm going to switch gears a little bit.
Sure.
Let's talk insurance.
Sure.
So you said that you went to Fortune Builders for the real estate. That's kind of like got you started into it. For the life insurance, you mentioned the book about what would the Rockefellers do? Is that what you said it was?
Yes. Yeah. Both.
Yeah. So was that the first intro into it, like, or was that after hearing a little bit more grumblings? Like, what really pushed you to say, I want to do this as an actual broker versus just opening your own policy?
So I get this a lot because how does one spend at the time 18 years as an electrician, and now you're like involved in life insurance? Like what do you know about life insurance? So it's a funny story. So as I dive into podcasts and more financial literacy over the years, I come across the author of What Would the Rockefellers Do, Garrett Gunderson. So I started listening to some of his content, and I said, you know what, let me give this book a try. This is interesting. The book is about building your family bank, and it goes into the structure that the Rockefellers created and the concept behind those structures. So right away, I'm like, wow, this is pretty amazing. Now I'm already using like a self-directed IRA. I'm like, this to me is like a self-directed IRA, like 10x. Mm-hmm. So what do? I start calling insurance brokers like to get one of these plans put together, and
Right.
I could not find someone that kind of checked all the boxes for me. My friend Jamie called me up. I want to say it's like 2021, and she's like, "Hey, I want to talk to you." And I'm like, "Oh, stop right there. Listen, I know you're doing insurance, life insurance. I'm looking for this specific thing. Can you do this?" And she's like, "Yeah, absolutely." So I go through their whole process, her and the sales manager in the office, and I'm like, "Wow, this is really cool." Like I'm into finance, like full tilt at this point, right?
Yeah.
Real estate finance, and I want to put the tools down. I'm like, "What's a career in this like?" So I get invited into the firm to sit down with the sales manager, and he kind of broke down everything. And he has a similar story as me. He was a contractor into his late 30s, and then he transitioned into life insurance sales. Like '08 happened, his business was slowing down, and he just jumped right in, and he's been doing it ever since. So he's in his 50s now. So we shared a lot of similarities. So I go get licensed. I start studying. I take the test. I get licensed. I get into I join as a career agent in the beginning of 2022. So what I thought was going to be like freeing my time up, like I could go walk properties during the day, I could sneak off and look at fix and flips and all these opportunities. It was actually just another job where,
Yeah.
like, how many calls did you make this week? How many appointments did you set this week?
Mm. So
And I'm
you were
like,
being tracked by that firm? Like you went and partnered with them?
yeah. Well, at the time, I basically was hired as a full time agent.
Sure.
At the time. Right.
Okay.
So there's like independent broker and then career. I'm an independent broker now, so
Okay.
I kind of walk my own path. I
Right.
have to
Right.
the only requirements I have to meet are for credentialing, like annually, and insurance, like make sure I have my own errors and omissions. But I don't have to report to anybody like, "Hey, I didn't have any appointments this week. I'm sorry."
Right.
Like
Yeah.
it was a lot of that, but there's also a lot of high quality training. So I already have this investor mindset coming in, and now you're just feeding me all of this training, and I'm like,
Yeah.
wow, this is great. But I don't like being held captive, like where I can't go out and do real estate deals. So long story short, I got asked to go get my securities license, and before I
Okay.
committed to that, I said, listen, we should probably talk about my outside business activities. That's what they refer to it as.
Sure.
Because I do private money transactions, and I'm actively pursuing real estate, and I have an electrical contracting business, and they really don't want you to have any of those things going. The
Yeah.
firm, and then the securities, even more so with like private money, it could become an issue with the securities license.
Sure.
So I just decided at that point it was better for me to just be independent, and from there I continue the contract. I continue to kind of work out of the union hall if it makes sense. And then I continue to build my life insurance practice until I get to a point where all of my businesses and practices are kind of paying for everything that I do and everything that I need in the month. Then I could 100% transition to start focusing on those things. And I have a lot of partners as well because I've decided I shouldn't be doing everything.
Yeah. Dude,
Past
that's awesome.
experience.
I love it. And the fact that, you caught it early on that like you just signed yourself up for another job and you're like, wait.
Yeah.
Like, you caught it, you made an adjustment, and now, like you said earlier, you can kind of pick and choose where you're putting your time and your effort, what's going to be the most beneficial for you. So great outcome at the end of it.
And what I found was with the life insurance, I truly enjoy the planning aspect of it. Some people are very transactional. Like, someone will ask for, hey, I need a term policy for $200,000 of death benefit, and I don't do that sort of approach, right? Like, if we're not going to sit down and have a round of conversations, I have to get to know the individual or the couple or
Sure.
whoever's approaching me. It could be for their elderly mother. I want to know, like, what do you need? What are you doing? What are your goals? What do you have? What do you not have? What's missing in the whole picture? So it takes, like, my process is a little slower than other people's. It might take 2 to 3 sessions before I'm like, okay, I think I have an idea of what we need to do here.
Sure. Yeah. No, I like that approach though. Like you said, it's either transactional or it's relationship based. And
Yeah.
like a lot of things, relationship based is just going to take you further.
And when it's transactional, what happens is 6 months after someone buys a product, they're like, what did I buy?
Yeah.
Why did I buy this? And then you don't want to be that. You don't want to be there when that call comes in. Hey, why did you sell me this? Well, you asked for this. And it's like the neck down approach. Like, I didn't put any thought into it. I just sold you a product just to get a commission.
Sure.
Like, that's not what this is based on. This is about like, hey, let's put a plan together.
Totally.
If someone doesn't want to put a plan together, I actually don't even want them as a client. I'd rather just be like, you know what? Call, Jake from State Farm down the street.
Yeah. Get khakis on the line.
Yeah, exactly. Exactly.
All right. Nice. So, going into the different types of life insurance, well, there's two things. One is, do you do mostly whole life or do you do mostly term? What does that mix look like for you?
I do it. We do everything.
Okay.
It's term or whole life, and there's a place for everything. Like, I get a lot of requests for whole life and different styles of whole life. I get a lot of requests for term, and then what happens is when I get requests for something specific, and that's why we sit there for a couple days or a couple sessions. All of a sudden, we open up to, yeah, you know what? Like, I'm missing some other pieces to the puzzle here. I make recommendations on, like if people have credit issues and things like that, like, okay, let's talk about credit card debt. Let's talk about some other things that are happening. So you kind of put together a snapshot. If I don't have the answer, I typically know who I can steer them to and say, hey, you should probably talk to this person. They might be able to help you. And you can't do that if you're transactional. You can only do that when you get to know someone in adults.
Yep. Totally. So you do everything. It's really based around the person. But I really want to dig into the whole life. So I'm aware of what it is. I actually don't have technically a whole life insurance policy. I have like the IUL. I can't remember what the first what I stands for. Index. That's it.
Index universal life. Yes.
Yeah. So everybody, I think, for the most part, is familiar with a term life insurance. But I'd love for you to kind of break it down. Like, what's the difference between a term and a whole life?
Sure.
And then we can get into why you would go one way or the other.
Very, very simply, since we're like real estate based guys, right? Like, it's the difference between renting and owning. If you were to buy a term policy, it's for a designated period of time. It could be 10 years, it could be 20 years. When you buy whole life, it's permanent, right? It's until the day that you pass. So you own that policy for the duration of your life. What whole life does is whole life offers a cash value component. Think of it as a savings account. So as you're paying for whole life, it's also providing you an account that you can access and utilize for different things. Could be a retirement supplement. Could be that you borrow it to go buy a vehicle. There's so many different things. You could borrow it from it to go put a down payment on a property if it's, if you acquire a large enough volume of cash value. Term is a good place for term would be, I have a mortgage, and I need to make sure it's paid off if I pass. So I'm only going to have that mortgage for 20 years. So I only need a term that covers that mortgage for 20 years. Now, the mortgage is getting paid down over those 20 years. So what we can do is we can ladder the term down, right? We can start with a lot more term for the first 10 years. And then at the end of 20 years, have less term so that premiums and payments are dropping off at different intervals. Like I said, there's a lot.
Yeah, I didn't realize that.
Yeah, instead of just buying like one term, you can have multiple policies. I have multiple policies that have different functions.
Sure. Dude, yeah. First of all, I've never heard of anybody reference it to renting or buying, but I love that reference there because it's perfect. Like you renting your life insurance policy or you're buying your policy. And
Yes.
uh, I love that. I'm going to use that.
And this is a fun fact. Term policies only pay out 2 to 3% of the time, which
That
means
low?
that means that out of everyone that has a term policy, only 2 to 3% of those
Oh,
individuals pass away. Now,
gotcha.
the benefit is that you won, right? You're alive. You made it past the term, right? But what happens is when you don't have whole life and you get to a certain age, you're like, okay, my term is gonna, time out. You can hold your term past that point, but it's substantially more expensive. And the other side of that is, let's say medically you're not qualified, right? So let's say you wanted like a whole life policy and you're older, you
Hmm.
know, something like diabetes could just be like a disqualifier,
Sure.
you know.
Yeah.
And like what you don't want to do is you don't want, like, a lot of us, like now I'm a prime example. I woke up in my 30s. I had a 2-year old. I had a house, my wife. I had no life insurance, right? And a lot of
Yeah.
times I'll talk to people that are in their early 20s, and they're like, "Oh, I don't need it. My parents said I don't need it." And then what happens is 10 years goes by real fast, and then you wake up like me. You're like, "Crap, I got a mortgage. What if
Right.
I die?" Like, just little your perspective changes, and
Yeah.
that's a part of getting a little older.
Yeah, totally. And I think a lot of people really just they tie their life insurance to their employer, right? So, that's pretty standard to have a term policy through your employer and you get a discounted rate or whatever it is. But what happens when you lose that job if
Yes.
you know that policy is gone until you get a new job or you go and get your own policy? And if you're actually working and into retirement age, like you said, now that policy's gone and you don't have anything and you have to reapply, in your 50s or 60s for retirement.
Yep. And this is like why what would the Rockefellers book,
Yeah.
reading that is so powerful, because they base everything they do on whole life. So they've built an entire infrastructure of finance that as a family member passes, the money goes into the family bank essentially and buys more whole life insurance for newer family members,
Mm.
so that the money and the wealth is always retained in the same family, in the same group.
Yeah,
And
I was wondering about that, if the cash balance would be transferred or if it gets paid at, like essentially gets paid out to somebody, a beneficiary, or if it goes and gets dissolved into the insurance company itself.
no, it's yours. That cash value is yours to
Awesome.
use, or it goes to the beneficiary.
Yeah, that's
So
great.
100%.
So what's the entry level for a whole life compared to a term? I know that's one of the sticking points. You do kind of have to be, maybe this is a misconception. I'd love to hear from you, but you do kind of have to have a little bit better foundation in place with your finances, is
Yeah.
my
So
understanding.
whole life is expensive, compared to term, and the reason that is because the insurer knows that, hey, we're going to pay on this policy. There really isn't like a starting point. Like, that's why it's budget, right? What's a person's budget? If whole life is more expensive and we can't afford it, but we still have a need for coverage, then let's work within the budget to create that need, or to create the protection. So we want to structure it that way. If we can afford more whole life, yeah, absolutely. You know, and there's different ways to pay whole life. Like, you can pay whole life for 10 years, 15 years,
Hmm.
20 years. You can pay it to age 65, age 85, age 100. There's an array of options. So it's really very open ended, and there is no like right or wrong way. There's just specifics of how to approach it, and it's based on the individual.
Nice. Okay. So yeah, I mean that's awesome to know, and I think for everybody listening, you know, finding somebody like Jason who really knows the ins and outs of what this process looks like. He's relationship based. He's going to really find what your goals are and then work a plan out around that. I think that's the key, right? Because you don't just go get a whole life insurance policy from anybody. And, they might know about it, but I think there's a lot of agents out there that aren't well versed in it and are more transactional. So
It's funny you say that, because when I went into the firm, when I went full time as a career agent, I'm like asking everyone, like, all right, now that I'm here, I'm licensed, how do I design these policies?
yeah,
Like, and no one was willing to do it or was able to do it until I met like a couple individuals. That it
oh
was
wow,
like it was like only a very small percentage. And even like my friend Jamie was like, I educated her on what could be done with these policies, and she had been selling these products for a little
yeah.
while at
She
that point.
sold you a product, right? And then
Yeah, yeah, I
and
was
then
her
you ended
client,
up
and I was 100% her client. And
yeah,
my wife and I started my kids on policies as well. Like I learned a lot from her, and then she learned a lot from me.
yeah. Is there an age restriction on or any limits on what you can do with kids?
As soon as they get a social security number, you can get them a policy.
Okay.
So
And
as soon as that number is issued, that's like the gift, like the greatest gift you can give them, because the earlier they start, the larger it grows. It's
right. I want to connect
time.
with you about that afterwards because when I got my policy, I was told that, kids weren't allowed in that same type of program or whatever. So right now it's just on my wife and myself. So I'd love
It could
to,
be the carrier. It could have been just the
yeah,
carrier
yeah.
that they were working with. But like my kids have two whole life policies. These are very generic, standard whole life.
Hmm.
Um, when my daughter was done with daycare, I had extra 1,200-1,500 bucks a month, because
Oh
we all
yeah.
know what daycare costs these days.
Yeah.
And I decided that to take a chunk of that and just commit it to the kids as a whole life policy to get them started.
That
So
is a very responsible move. And I love that you did that because, a lot of people would take that extra $1,200-1,500 a month, be like, now what can I do? Like, what fun stuff can I do every month to go out to eat more or
yeah,
buy a new TV, buy a new car?
yeah, and it's funny you say that, because like my wife's like, and I we were having a conversation. A lot of people have like nearly $1,000 a month car payments, but like they don't put $1,000 a month into their life insurance.
Right.
Now, one would say, like, why would I buy that, put that much money into life insurance? And the reason you do it is to build up that cash value, and what
Yeah.
you can utilize that cash value for. So like we have enough cash value where I can go down to a car dealership and I just need to negotiate on the price of the vehicle. I've created my own financing, and
Right.
as time progresses, I will only have more and more of the ability to finance. Which this is like a perfect segue into the infinite banking concept, which I get
Yeah. I
a
wanted to get into that
significant
for sure.
amount of requests, right? So, like, there's a couple things to consider, like with the infinite banking concept. There is no such thing as an infinite banking policy, right? It is just a financial concept. It's just the
Hmm.
vehicle, the vehicle of choice is a whole life vehicle. So the concept is more of a responsibility belief system about creating your own finance. The vehicle is whole life. So what I make sure I do whenever someone asks me about, opening this sort of policy that's focused on cash value, because what it does is it builds cash value in the early years of the policy through engineering and riders and components that we add to it that you typically wouldn't have on a standard whole life policy, where the cash value growth is slower, and both vehicles serve different purposes. Um,
Right.
you know, being liquid and having liquidity and being able to borrow against your policy is super powerful. And having a plan that's building cash value over many years is also very powerful. So there's different perspectives and different needs. When we talk about infinite banking, we're basically creating our ability to finance the things that we need or things that we want to invest in without having to go to a bank and submit a credit report and ask for permission. I simply just log into my account. I make a request for a policy loan. Within a couple of days, that money is deposited into one of my accounts.
Yeah. So I think for the people listening, if you're still kind of questioning how this works and like what infinite banking, there's a lot going on here, but I think that um, you're saying at some point you start a policy, you put some money in every month, you put in just like a savings account. Some of that money is going towards the actual operation of the account itself. And then a good chunk of it is going towards your cash value. So that kind of becomes your savings.
Yeah, without getting into the weeds of the structure of the insurance,
Sure.
that's a good way to describe it. So as the premiums are paid on the policy, a component of that, or I should say, percentage of that forms a cash value pool of money
Okay.
that you borrow against. Now, when I borrow against that cash value, the insurance company collateralizes my policy, so that when they give me the loan, they're actually giving it to me from the general fund. So the money technically never left my policy. So I'm still getting growth in the policy, because the policy has an annualized growth that can vary from year to year, but I'm getting compounding interest in my policy that does not get interrupted. And then I'm taking my money out and I'm putting my money into something else and using it there.
Right. Yeah, because, and I forgot about that part of it, but so you're essentially taking a loan from what your death benefit is, not the cash value. Is that
From the
right?
cash value. It's not a loan from the death benefit.
Oh, okay. Okay. It's just collateralized.
So we're gonna get into the weeds for a sec.
Okay.
Every time we pay into a premium, we're slowly increasing the death benefit, which in turn also increases the cash value. And what we're able to borrow is the actual cash value.
Yeah.
If that makes sense.
Yep.
So
yeah. So over time, you get enough in that cash value to where, like you said, for an example, if you wanted to go buy a car, if you have enough in that cash value, you can take the money out yourself and pay for it cash. You have negotiating power now. Like, I'll pay you cash instead of, fussing over terms. And then you end up making your self payments back to that account through the loan.
Correct. And you recapture, in that case, you're recapturing the money you would otherwise give to a financial institution. So if I went to a bank and got a car loan, I go to work, I pay the bank the loan, that money goes from my income, my W-2 income, to the bank, and doesn't benefit. I'm just paying a loan and I have a car. I go and buy the car and I fund it through my policy and I pay my policy back. Now I could reallocate that money again and repurpose that money to another opportunity or another another thing I need to purchase.
Yeah, that's awesome.
So recapturing, so you're creating the ability to create your own you're creating the ability to finance the things you need and recapturing the money at the same time.
Yeah.
And while the money's out of the account, it's still compounding. And that's the concept. That's like some fundamentals of it.
Yeah.
The vehicle is the whole life, but that's the concept. The concept is about recapturing your money, being able to create your own financing, and having, again, it's great having power to bargain.
Yeah. Awesome. Yeah. I know, like, for myself, when I first started looking at this and learning more, I had some conversations with people, and even now, it's been a while since I've really dug into it. I still have questions. So I think best thing for listeners, like, if you really are wanting to learn about this and getting into some of those details, really, I would just reach out to Jason. I'll have his contact info in the description for you, so you can reach out and see how this can maybe benefit for you. And really just making sure that you're prepared. If you don't have a policy, or if you only have a term policy, it might be a good option to at least reach out to them and see what is available to you.
Yeah, it's a matter of just having a need. Like, if you have kids, or you have a house, or you just have some debt, and you're like, hey, if something happens to me, even just loss of income, like, we could touch on that too. Like, like, if I were to pass away and my income was gone, how do I recreate my income? Because my wife still needs my income. Because what you don't want to do is you don't want to just get a big lump sum of money and start, chipping away at that and eroding that over time. Sometimes we create a larger term policy just for the purpose of, if I pass away, I could recreate my income by reinvesting that, reinvesting the principal, getting a return, and then I have income, or my wife
Nice.
would have income.
Sure. Nice. Well, I know I don't want to get too much into the weeds, but I know that we had so in the sub two group we had another person in the group, Rhea Campbell. I think she mentioned she's doing her due diligence right now, looking into it, and she posted a question about this and like how would a policy be used for your everyday expenses, and does it even make sense to do it that way? What are the benefits? What are the risks? So I wanted to get that question answered. Again, don't have to get too into the weeds, but if you can
Right.
give us a quick rundown on that.
So it depends on the person's discipline on how they manage their money. It's a lot to manage monthly expenses without involving policy loans and then repayment. But it would work, yes. She's going to recapture all the money that she puts out every month for normal bills. Now, I think there's a misconception on the growth of the policy in a lot of the posts that I see, and it's not like a an end all be all. It solves all financial challenges, but she can create a loan, pay her bills, and then recapture from income that comes in. She could go ahead and just pay the loan back, and she could do this process every single month. It's not going to make the cash value grow any larger. Time is what makes the cash value grow. Paying premiums for a period of time is what makes the cash value grow. So if it's just about recapturing and repurposing money, yeah, absolutely. But if we're looking at like ROIs and start getting into like where can I make the most money on my money, just paying bills is not going to achieve that.
Sure.
If I take the money out and go invest it, and it's a profitable investment, now we're making money on top of our money. So it's more of a question of, is it the best use of the policy? It really comes down to the individual. I don't think there's a right or wrong answer. It's just about structuring correctly, the discipline of how I manage my money or how the individual manages their money, and understanding that the flow, how your money is going to flow. You have to build a flow chart, essentially.
Okay. Yeah. And you help people through with that. So I think,
Yeah.
Rhea, if you're listening to this, connect with Jason.
Yeah. And like very important, like a lot of times like I've been there before, like years ago, I got my first insurance policy. You hear from them once and then you never hear from them again.
Yeah.
It's very important. Like 6 months from now, like we connect if we haven't talked. I mean, a lot of the people that I'm doing policies for, I talk to them on like a monthly basis, at least a text message, or some of them are phone calls. Like some of them are sub two students. Like we have full blown conversations, constantly.
Yeah.
But it's important like to come back and revisit, because we forget how it works if we don't look at it every day. And it's important to understand why we put something in place and what are the plans, because that's why we talk about that for a couple sessions. Hey, what's your plan? Where are you in a year? Where are you going to be in 3 years? Where are you going to be in 5 years, 10 years, and even, and further out. So there's a level of continuity that we have to maintain to make sure everything is working correctly. If you're taking policy loans out, I want to make sure that you're not going to blow up the policy by maybe accruing too much interest debt against the policy. And you got to make sure that everything stays, solvent. It's important. And that's the discipline part.
Nice. Thank you. Okay, so I'm gonna kind of switch gears again. We talked a lot about real estate and whole life insurance, and how these kind of work together.
Sure.
Really want to jump into kind of the balancing act, like we talked about at the beginning, the mentality and the strength it takes to do what you do. Like, what do you think for an average person? Like, what's the best approach for getting into the right mental state and taking the first steps?
It's depends on the day. I mean, there are days I wake up and I'm like, this is just not off to the right start. Or I'm not going to the place that I want to go. If I'm going to a job site and I have 3 or 4 insurance policies that I want to focus on, or I have 3 or 4 properties that I want to go visit. Sometimes I just take a day off, like, from the contracting. I'm like, no, today is an admin day. Today I have to focus on these things because these things are important towards building future plans that I have. As far as a balancing act, I mean, I don't have an off switch. Like I said before, like I'll go 12 hours, 14 hours. I'll just crash at some point at 10 o'clock at night, and I'm like, all right, that was a little much. Maybe I'll go 10 hours tomorrow, or maybe. And then sometimes you just have to check out. Like I'll just binge watch a bunch of shows with my wife, that's like our vice, or we'll go to the movies, and you just you got to check out. I mean, I do. I'm very active. Like I study karate. My kids are in karate. I'm very involved in my kids' sports, so I do get a break. I'll rest when I die. Kind of like I'll just go. I want to quit my W-2, permanently. I've made 2 attempts at doing that, and I've had to go back twice. I've learned a lot from those 2 attempts. I think the only thing that kind of keeps me balanced is knowing that a lot of the income I'm bringing in from my W-2 these days is flowing into the things that I want it to flow into. So it doesn't feel like I'm here just to pay bills, or I'm just here because I have to be. I'm here because I chose to.
Sure. Yeah. So you're leveraging your W-2 versus feeling
100%.
stuck.
100%. And if you talk to a lot of real estate investors, like they look at someone who has, like, I have a good paying W-2. Like you have a good paying W-2 and you got good credit, like you can go get mortgages. Where the real estate investor that doesn't have the W-2,
right,
it's difficult to go the conventional route. And while we focus on a lot of creative stuff in sub 2, for example, there's still a place for creative loans. I mean, conventional loans.
Sure.
And people, you see people posting saying they're looking for partners to have good credit in the W-2 so that they could kind of put structured deals, differently. So, yeah, don't quit the W-2 just yet. Like utilize it.
Yeah, totally. I think a lot of people, and I'm myself included, you fall victim to, you want to do more, you want to take on these new endeavors and things like that, and you get to a point where you feel like that W-2 is a hindrance, but really, and again, like I fell into this too, but at some point you have to switch that mindset to using it as leverage for what you want to do and like where you want to put that money.
Absolutely.
Yeah, I think you worded it great. It's you're putting it to use where you want it versus I have to do this to make my mortgage payment.
Yep. And I can't leave out my wife. Like she's super supportive.
Sure.
I mean, like, I
You're
know
good
a
at
lot.
that.
A lot. Yeah. I mean, I know a lot of people that they want to get involved in like real estate, or, they'll ask me about life insurance and things like that. And their spouse isn't 100% on board. Mine kind of just lets me go with it. Like my wife, like, this is little story. My wife let me buy a 200 horsepower Ducati at one point.
Oh.
With a 3-year-old. Like who does that? Like, wives out there, like how many of you would be like totally like, yeah, go, and I leather her up and I go right to the racetrack on it. Like,
nice.
And like she'd go there and watch. Like, there's not a whole lot of spouses that are like, yeah, go ahead and try to do the real estate deal and put all our money into something.
Yeah, it's
she's
definitely
a
a
believer.
special type of person.
Yeah, I mean, we've educated ourselves a lot, which helps. So it's not like we're shooting from the hip. Even in the early days, we really did a lot of content consumption. So read a lot of books, felt prepared to go out there and try to make something of it. I think my advice to guys or girls that their partner isn't supportive, just bring them in, involve them. Like, hey, let's go to a meetup and just see what this is about. Or, hey, let's go to a seminar and see what this is about. I mean, I've met some amazing people at the seminars. And you can, there's a lot of relatable stories of how people got started.
Right. Yeah. Dude, yeah, I love it. And, of course, you can't go anywhere without really calling out and commending the partner, typically behind the scenes, but sometimes they're in the front too. And they're right there with you, but they're always the backbone of making sure that, and the why, the reason that you or anybody just keeps going.
Absolutely. My wife's
Yeah.
the integrator. Like she, like, even for this podcast, like she
Yeah.
organized everything that we needed, for me to be here and be like, precise, like on my responses. Like she's like, no, this is how we got to do it. I typically come up with an idea, and
Yeah.
it's a good idea on paper, and I'll go out and do it. It could be a real estate deal. I'm going out and getting it. And then I just hand all the contracts and everything off to her. And,
Yeah.
hey, can you clean this up? Can you fix this? I made a mess of things, but this is going to work. I just need you to fix a few things here. And she does it. She gets it done.
That's awesome. All right. Well, we are pretty much coming up on time. This one went a little long, but I think it had so much information here. I have one more question.
Sure.
What is the one food that you can go back to? Like, if you had to choose one for the rest of your life, what would be the one that you go to?
This is a tough. I'm torn between pizza.
I knew that was on the list.
And Mexican food. It's a very, very tough call to make.
Yeah.
It would be like, all right, so if we had to be specific, it would be like carne asada fries.
Oh, nice.
So there's a place in Chula Vista, California, called Lolitas. They have the best carne asada fries I've ever had.
Nice.
And pizza, I'm in New Jersey, so
yeah,
I could throw a rock and hit 10 pizzerias from like where I'm sitting right now. So
right,
and they're all good.
When I was thinking of that question in my head, I'm like, he's from New Jersey. He's got to say pizza, right? But I figured you might have a curveball in there.
That would be it. It's a tie between those two for sure.
Nice. I love it. All right. Well, Jason, thank you so much for being on, man. I really appreciate it. And, like I said before, everybody, if you're listening to this and you have questions, I'll put his contact info into the description. So make sure to reach out to him if you have any questions and want to get some more information about how to open up a whole life insurance policy or any other policy that he might have available to you. And thank you, Jason. Appreciate it.
Awesome. Thank you for having me.
Yeah, of course.
Great.
All right. We'll see you on the next episode.